Barry Schwartz is our featured guest. He has a close eye on the Canadian banks, of course. Many investors do as well. We've just been through bank earnings season. We saw a bit of a mixed bag, a soft open of the reporting season for Bank of Nova Scotia. Some much stronger numbers from the likes of CIBC and Bank of Montreal by the time that bank earnings season closed. What do you think, Barry, of these results and of these stocks?
Well, the problem is there's no earnings growth, and the outlook for 2024 is most of the Canadian banks are going to report earnings declines. And so that doesn't really make the outlook so exciting for Canadian bank shareholders. In fact, for a number of Canadian banks, there's been no earnings growth since 2021. And for some banks like Bank of Nova Scotia, I don't think there's been earnings growth since 2018. So it's reflecting in, of course, the stock prices, which have gone nowhere. I guess you feel happy that you've collected the dividend. So like every type of company and industry, there's a good news, bad news story. The outlook, Paul, is terrible for the Canadian banks heading into 2024 unless mortgage rates are cut and interest rates are cut. At least the consumers will feel better, and we can have some reacceleration in loan activity and mortgage activity. The only problem is that that may not happen for a number of months. And in the meantime, of course, there's not a lot of IPOs. There's not a lot of secondary offerings. So just the market is very, very slow. And the regulators are putting a lot of pressure on the Canadian banks to increase their capital. Acquisitions haven't gone very well for the Canadian banks lately. They're probably even not allowed to make acquisitions. Royal's still having trouble closing the HSBC deal. TD had its debacle in the U.S. These are not good scenarios. The skeptic would say, well, Barry, that's already reflected in the stock prices. They're near multi-year lows on valuations. Don't cry for the Canadian banks. They're still earning a lot of money, and that's fair. So what we really have to hope for is, and what the market's expecting, is a reacceleration of earnings into 2025. And I just don't see how that's going to happen unless interest rates come down. And of course, dropping interest rates are not good for net interest margins for the banks.
What do investors do then? Many investors, probably most Canadian investors, own Canadian banks one way or another. Should they lighten their exposure now? What would it take for them to increase their exposure? Well, when would be the right time to increase exposure?
That's a great question. So you have to figure out what type of investor you are. I would never recommend owning an exchange-traded fund because you don't get to pick and choose the best banks. There's a quality scale to them, and clearly at the top is Royal and National. Below that is TD, Bank Montreal, CIBC, and Scotia's all the way at the bottom. Scotia has some heavy lifting to do to right the ship, so to speak. But the outlook isn't that good. I guess what I would like to see is, no sign of recession and heading into 2024. The Canadian consumer is more resilient than we think. Of course, GDP numbers don't reflect that. So for long-term investors, I think you just stick with it. Maybe move up the scale, maybe switch out from a Scotia to a Royal or from a CIBC to a TD or a National. My favorite right now is Royal and National. I feel these are the best-run Canadian banks. Don't have the types of exposures of some of the other Canadian banks, and good exposure to capital markets, which I'm always bullish on.
Sounds like you do not subscribe to the view that one way to invest in the Canadian banks is to buy the laggards, the ones that have underperformed the group, on the theory that they will revert to the mean, that they will catch up. Scotia is what I'm thinking about. Scotia is now under new leadership and has an investor day coming within the next week or so.
That's been a horrific strategy for a long period of time. The winners have kept on winning in Canada. Royal and National have been the best performers going back for a decade plus. TD was right up there until the issues that it had recently. So I have no issues with the bank. I don't think we're going to be hurt by recessions. The capital is really good. Their mortgage book looks good. I don't think housing prices, I'm not a doom and gloom guy. Just until you get the earnings back, the mojo isn't going to be there.
Okay.